name is Karen Baldishwili. My colleagues usually call me K14 because I have a 14-letter Swiss last name. So they call me K14, but you can call me Karen. I'm one of 4 co-founders of Zenagos, and we call ourselves the Zenagos experts. And 3 of us are here today. So Stacy and Mavis are here in the room with me. Mavis and Stacy over there. Thank you. And each of us has more than 30 years of business experience. That tells you how old we are. So that's more than 120 years of business experience collectively between the 4 of us. And we've all worked in a leadership position in a very large company before. So some of the companies are up there on the screen. So we've hired, we've trained, we've managed hundreds of people in our careers. But we've also all started small businesses. And so a lot of the time when you get a business coach, they may not have actually ever started a business before. They might have come from psychology or something like that. So we've all started businesses before, and we've all worked in small businesses. So we don't come from just executive careers. We've started 17 small businesses between the 4 of us. And each one of us has been a solo entrepreneur at least once in our lives. So we know what it's like to start a business by yourself and be on a shoestring and try to get one customer to buy from you. It's very challenging. What's different about Zenagos is that we are real-time consultants. You have a question, Mavis?
I don't know that the screen is sharing.
Okay. It's sharing in here, but the person, is there somebody who can't see it in the,
Well, I'm on Zoom and I can only see you. I can't really see the screen. I see the screen. You can see the screen.
So you just need a different setting on your Zoom. You need to choose like gallery or something like that. Okay, thank you for the question. What's different about Zenagos is that we are real-time consultants. So our clients don't need to make an appointment. They just contact us in real time on Discord. So we get questions from their cars, from not when they're driving, from meetings that they're in. Sometimes they'll text us when they're in the middle of a meeting. We once had somebody attend a meeting while snowboarding. So
Wow.
So we're available Monday through Friday, 10 a.m. to 10 p.m. And we answer their questions, but if there's something more complicated that they need to, get together and talk about, then we'll usually jump on a Zoom. So that's a little bit about us. Our clients get access to our superpowers, which are a little bit different. So I focus on finance and business skills, business knowledge. Mavis specializes in sales and contracts and negotiations. Stacy focuses on digital marketing, automation, and AI. And Monica focuses on relationship building and partnerships. And so, we're all top level consultants, but we're really interested in working with small businesses instead of really large businesses. And so we want to work with you. Unlike AI bots, we don't hallucinate. And our advice is not a compilation of everything that was ever written in the past. So our clients include all kinds of businesses. So mobile app development companies, digital agencies. We have some doctors, consulting firms, retail firms, even building contractors. And what our clients have in common is that they want a sounding board. So somebody who can help them stop second guessing, help them stop overthinking, and get a little confidence in their decisions so they can get to the next level. So if you're wondering why you're not getting results from your marketing dollars, when you'll get to the point that you can hire, Zenagos might be the answer. Cambridge Development Department is sponsoring some Zenagos coaching. So if you qualify, you might even be able to receive some free coaching from Zenagos, funded by CDD. So there'll be more about that at the end of the presentation. A couple of housekeeping items. So if you're online, please engage in the chat. Mavis and Stacy will be looking out for you and making sure that your questions get brought into the room here so that you get paid attention to. I'm happy to answer questions about the content when they come up, and so they'll be, paying attention for that. Also, feel free to connect with us on LinkedIn. If you type in Zenagos on LinkedIn, you'll get all 4 of us, and feel free to connect with us. But make sure you say that you were at the Cambridge presentation so that we'll answer back, because lots of people ping us all the time on LinkedIn. So that way we'll know who you are and we'll link back with you. We will have a QR code at the end for the summary slides. So you can use that with your phone, whether you're in the room or online. And then you can get the slides from the workshop so you don't have to copy them all down. And our objectives today. So by the end of the session, you're going to be able to structure a monthly financial check for your business. You're going to be able to evaluate your revenue and your expenses. You're going to be able to track your marketing performance by channel. We'll talk about that word, channel. And we'll have a way to forecast future performance. We won't be doing forecasting today since it's a little bit, beyond the scope of what we're going to cover today, but I'm going to give you a way to do it. And you don't need to worry about taking a lot of notes or screenshots because we're going to get you those slides. So remember that. To get started, what kind of business are you operating? So if you're online, go ahead and put that in the chat. If you're in the room, we're going to go around. And when I say business, I mean all of you. So any kind of organization, we work with nonprofits, governments, we coach individuals. And so just tell me about what problem you're trying to solve. So what kind of business do you have?
Well, I have both the nonprofits that I just in the process of starting, although we do think it our 501(c)(3). And then I also, because as the director, you can't get paid, so I will be using arts and crafts also, as well as grant writing and solicitations. We'll be using art and crafts. And then I will have my own side business with the arts and crafts where I'll go out and to fairs and stuff, which is what I was doing before COVID.
Awesome. Awesome. Okay, so a nonprofit and a business.
And I am thinking about two tracks. So one would be arts and crafts, and the other one is becoming a therapeutic coach.
Okay. Okay. And those you haven't started, you're going to choose between?
You would choose between or either create a portfolio career.
Ah, interesting. Okay. And how about you?
I'm doing a business regarding kind of consultancy, which have small business collaborate with research institutions like MIT or Boston University.
Okay, so a consultancy with a research component,
Yes.
maybe with universities as customers. Yes. Okay, understood. All right, and a question from the chat?
Yeah, so we have several folks, life sciences, technology, consulting and trading. Someone doing an events company, Red Dress Events. Someone doing fine art, print, publishing, art dealing. And someone who's doing health coaching, women navigating menopause.
Great, what a great spread we have. We have some product, we have some service, some kind of one-on-one, some that have more, employees probably developing in that pipeline. Excellent. So let's talk about, as the proverb goes, a journey of 1,000 miles begins with a single step. And so we're going to talk about financials. And sometimes when we start talking about numbers, people get overwhelmed. They get uncomfortable. Maybe they don't like numbers. Maybe they didn't like math in school. And so just remember that all you need to do is take a small step, just one step. And then once you've turned that step into a habit, then you can take another step. So you don't have to take all the steps at once. I'm going to cover a little bit of a range so that if you're more advanced, you'll hear some things that apply to you. But, all you need to do is take one step. Like a small step will make a big difference in your business. And so we'll talk about that more as we go along. But Rome wasn't built in a day, and building a strong business takes years. And so, math is sometimes not everybody's favorite subject, but a little bit of improvement at a time. We always tell our clients, who are almost all small business owners, that one of the most important things they can do is make a monthly appointment with themselves. So we can do it right now. This appointment is for your financial checkup. And so we would set aside 1 hour on one day, once a month, and you can do it usually in the first week of the month. So we've already passed the first week of March, but in the first week of March, you would have had your appointment with yourself. So you can go to the first week of April now and make an appointment with yourself. So Wednesday, April 1st is the first. So you could do it like Wednesday or Thursday or Friday and make a little appointment with yourself. Make it at a time that you're not going to get interrupted and that you have high energy. Because this appointment, you're going to feel tempted to cancel. But don't cancel your appointment with yourself. If you have a bookkeeper, it's going to have to be a little bit later in the month because the bookkeeper usually needs until like about the 15th or so to get your books back to you. And so you'll have to make your appointment with yourself after you've gotten your books back from your bookkeeper. So, you know, this is the perfect week right now, right in the middle of March. If you've got a bookkeeper, you just got your books back and you can make your appointment this week. So make that appointment and don't break the appointment. This is your promise to yourself to spend a little bit of time once a month looking at your financials. And honestly, just looking at them will make a really big difference in your business. Just looking at them once a month is going to make a really big difference. And we'll talk about what to do with that time, but take a time when you have high energy. So for me, that's first thing in the morning. I'm a morning person. And so if I make my appointment, 9 o'clock in the morning, first thing in the morning on a Thursday or a Friday, that's my best chance of high energy and not getting interrupted. So get that appointment on your calendar. You can do it right now. Now, when the time comes for the appointment, this is your agenda. So I'm going to go through this whole agenda. I'm just going to go through it all quickly, and then we'll dive into it in a little bit of detail. So first, make sure that your books are complete for the month that just ended. So if they're not yet complete, set time to complete them, get them done, and then make your appointment with yourself. So you need to finish up your books for the previous month. And we have kind of a tradition of picking the end of the month and saying, okay, we're going to make the books final on that date. And if you've ever done any accounting, you'll know that things are moving all around. So you haven't gotten your bank statement yet, or you haven't gotten the receipt back from that trip you just took. But as a kind of a custom and a discipline, we close the books at the end of the month. And then if something comes in after that, then we put that into the next month and make a correction. And so that's kind of the tradition. And so you want to just close the books. And so that means that you've looked in your bank accounts and made sure that you understand all of your revenue and that you've recorded that. And that you look at your expenses. And if you have any receipts, that you've checked those receipts and put those into your accounting system, whatever your accounting system is. And that you've looked at all the ways that you spend money. So if you have a credit card, you've looked at your credit cards. If you write checks out of your bank account, you've looked at your bank account. If you Venmo or something like that, you've looked at all the ways that you get money and all the ways that you spend money, and you put that into one place so that you can see what your books were for the previous month. Now, my first business was a tutoring business in California, and I kept my books on paper because there was QuickBooks at the time, but I just had a paper ledger, and that's how I did it. And you can do it any way you want to. Just make sure you're doing it. Write everything down once, and then make that appointment with yourself to take a look at it. So, okay, you finished the books. Now we want to review your revenue results. So how much income did you make in the previous month? And where did it come from? So we're going to talk about that more in a few minutes, but that's what happens in the next step in your appointment with yourself. And then you check your expenses. How much did you spend last month? And what did you spend it on? And again, go through all those sources. And we're going to talk about that more too. Now, one of the rules about this appointment with yourself is it never goes more than an hour. So make sure that you stop at an hour, no matter how far you've gotten. So for most of us, we'll probably get through the revenue and the expenses in that hour, and then we may not get to the rest of it until you get a little faster at it. So that's fine, just stop at an hour. Next month, you might go a little bit farther. But if you still have a little bit of time left, then we want to record the marketing and the sales results. So we want to see, where did your customers come from and how much did it cost you to get them? Talk about that more. I'll tell you how to do that. The next step is you want to update your financial forecast. Now, a lot of you aren't going to get to a financial forecast for maybe 6 to 12 months when you make this appointment with yourself, because it's going to take you enough time to record the revenue, to record the expenses, to record your marketing and what sources it came from. By that time, you're at an hour. Okay, you're done. But you'll get faster and faster at it, and eventually you'll be able to do all of that in like 10 or 15 minutes. And when you get to that stage, then you can do a forecast. Forecasting expenses is pretty easy. We basically know what we're going to spend. We kind of know what our rent is. We know maybe if we have a Zoom account, we know what that costs. We know what, when you make something, you kind of know what the materials cost that go into the thing that you're making. So expenses aren't that hard to forecast unless you have sort of a surprise. But forecasting revenue is a challenge because you have to think about what am I going to do to get the revenue. So we're going to talk about that more in a few minutes. And so when I have a video for you to watch that when you use that QR code at the end, you'll get the slides, and there's a link in the slides that will help you to get that video. And that'll show you how to do a forecast. So when you get to that point, 6 or 12 months from now, when you're fast enough at recording your revenue, recording your expenses, and doing your marketing, then you'll do a forecast. And so the forecast is looking forward. Your QuickBooks or your Zoho or your FreshBooks or your paper ledger, whatever you're using to record your financials, only looks backwards. It says, that's what I did last month. But a forecast looks forward. And so since you don't know the future, you're going to guess. And in a forecast, we guess what's going to happen with the financials in the future. And the beginning, your guess is going to be really inaccurate, and that's okay. You're going to guess, and you're going to be far from what actually happens, but you'll get better and better at guessing. And so that's the last step in that appointment. Finally, you're going to wrap up your meeting with yourself by making a 1% resolution. So what can I do that would improve my business a tiny amount this month? Just 1%. Don't overset your goals. Don't promise yourself too much, but just tiny steps. They add up over time. So just try to improve by 1% this month. And so when we get to that point in the appointment, we're going to ask ourselves, what can we do to improve by 1%? So now you have an overview of the whole agenda of your appointment with yourself. So let's dig in. So that first thing that we want to do in that monthly appointment is we want to review our financial records. And a lot of people use an accounting software like I said already, QuickBooks, Zoho, Wave, ZipBooks, Accounting. There are a lot of these, and some of them are free, or they're free until you start to use more complicated things in them. And so you can, put your things into a software. One of the things that's important about choosing a software is you don't want to spend so much time using the software that you're not running your business. There's all sorts of little things that you could add in and fill in the software. So look for something simple that you can operate pretty quickly. If you find yourself, entering every little field in your receipt and it's taking hours, then look for a different solution. You don't want your accounting to take over your business. So it's okay, again, to have your financial records on paper. That's what I did, and it works just fine. So if you do have an accounting program, if you go and you look at the reports, you'll see that there are 3 main reports. These are the 3 financial statements of a business. The one that you're going to use the most is the first one. So that one's called the income statement. And every company needs to have these 3 reports. The income statement has a whole bunch of names. And so when we get to it, you'll see it has a lot of names. It can be called the profit and loss. It can be called the P&L, which is short for profit and loss. Sometimes you'll see it called Pandl, P, little a, little n, little d, capital L, because the and sign makes a mistake in computers. And so people will put Pandl. And you're like, what is Pandl? It's P and L. It's the income statement, and that's the one that you're used to seeing. It has the revenue at the top, it has the expenses at the bottom, and then net income, right? And so that's the most commonly used of the financial statements, and it's the one that you want to get the report for out of your system. You want to find the income statement or profit and loss or P&L or whatever it's called in your system. The second report is called the balance sheet. We don't use that often in business. And I remember when I had my tutoring business, I would look at that and say, what is that thing? And then I would throw it away. And then there's the cash flow statement, which is even more confusing. And for most businesses, the cash flow is the same as the income statement. They're just putting the numbers in a different place. And so, for our purposes today, there's no reason why we need to go through a cash flow statement. And a balance sheet is very interesting. If we had kind of more of an accounting focus today, we could spend more time on the balance sheet. But for now, we're really going to focus on that one report, that income statement. So when you have your appointment with yourself, you want to pull out that income statement if you have some kind of an accounting system. If you don't, I'll show you what to do anyway. Most small business owners only use that one. Now, because it's really important, it has a lot of names. So it can be called the statement of earnings. It can be called the statement of operations. It can be called the profit and loss, the P&L, or the income statement. All those things are commonly used to refer to this document. It uses a period of time, so it's usually a month or a year. And so you'll have to kind of look and say, is this one for a month or is this one for a year? Sometimes it's for a quarter, but that's not as common. And it shows the company's income and expenses over that period of time. And if you've seen a financial statement for your business, this is probably the one that you saw. Yours may have a lot more lines than this one. So, this one just has, a few lines on it, but yours might have a lot of lines because you can have one line for every kind of expense that you have in your business. So you may be used to seeing an income statement with a lot of lines. So let's take a look at an example. So this is a P&L for a restaurant cleaning company. And it's a little small here in the room. So, I'll kind of read through it as we do it. But this is the P&L for restaurant cleaning company. Their bookkeeper just finished the books for December. So now it's the third week of January and the owner can review the numbers. So we're going to start with revenue. Let's look at the revenue. So that's your income. How much did you take in from the customer? And it's customary to put that at the top of the financial statement. Now we can see that this company has 5 clients and they charged each client $300 for cleaning last month. So the total income was 5 times 300 or $1,500 in December 2025. So that's their income. I've got it kind of highlighted in yellow there at the top. And they had 5 restaurants. They charged them each $300 and their total income is $1,500. Now, the difference between the word revenue and the word income. So for most small businesses, they're pretty much the same thing. Now, an accountant gets very excited about the difference between revenue and income because in a larger business, there's a lot of complexity and there are a lot of rules in accounting about when you get to count your money and recognize your revenue, is what they say. And so these rules have to do with, for example, if you make a product, you're not allowed to count your money until that product gets shipped to the customer. And, some states have different rules about these things too. But, that's why your income might not be exactly the same as your revenue because you might have to wait a little bit before you get to count it as revenue. But for most small businesses, we operate on a cash basis and they're pretty much the same thing. So if you hear somebody say revenue, think income. If you hear somebody say income, think revenue. They're mostly the same thing. If you're an accountant, they're not. But for our purposes today, we're going to call them pretty much the same thing. Okay. So you've looked at your revenue. What can you learn about this? So first, compare it to the month before. Now, I happen to know that they only had 4 clients in November. So they only made $1,200 in November and they made $1,500 in December. So what can we conclude from that? They got an extra client. That's good news. They all like getting an extra client.
They gave them more revenue.
Then they got more revenue.
Didn't raise their prices.
Maybe they didn't raise their prices. That's interesting. That's a good observation. And maybe they're growing, right? Could just be random that one month they had 4 and one month they had 5, but maybe they're growing. Maybe their business is getting larger. So look at previous months and this month. Am I getting larger? Am I getting more clients? Am I making progress? Did I lose a bunch of clients? Why? Is there something that I could do to improve my service so that I don't lose clients? So compare it to the previous month. If you have been around for more than a year, compare it to the same month last year. We call that year over year. You might see YOY sometimes, year over year. Why do we compare it to the same month last year? Because a lot of businesses are seasonal. So if you sell gifts, maybe December is the biggest month of the year. And so you wouldn't want to compare December to January because January isn't going to be as big a month. But comparing December this year to December last year, you could see, was this a better year? Am I growing? Right? So compare it to the previous month. And then if you've been around long enough, the same month in the previous year and even the year before that. Take a look and compare them. And ask yourself, does it make sense? So if you think the revenue should be higher than it is, you have to become a revenue detective and look and figure out what happened. So, for example, if people pay you through something like Stripe, maybe they didn't have the Stripe link. Maybe the money is stuck in Stripe somehow. So if you were expecting more money than you got, go be a detective and be like, where is it? What happened? go look around and go through all of your systems and see if you can figure that out. We're going to get back to Stripe in a little bit. We have some examples that are very interesting about that. So it's really important to ask yourself why, when you look at your numbers, why is it the way that it is and compare to previous time periods? And if it doesn't make sense, be a detective. Go look around and figure out what happened. And that's one of the reasons that your meeting can take a little bit longer, because maybe you have to look something up, right? So we always stop at an hour and you'll get faster and faster and faster. So what else can you learn from your revenue? You can ask yourself, is your revenue coming from one customer? Or is it coming from a mix of customers? So this company makes the same amount from each customer. They have 5 customers and they make the same amount from each one. I have a client who makes $400,000 a year. He's a video provider and he's doing very nicely. And he has, of that $400,000, $300,000 comes from one client. So that's a risk. If he loses that one client, he's going to lose 60% of his revenue, right? Or what did I do? I said 300 more, 75. Thank you. Thank you, Mavis Chin. Math. So he's going to lose a lot of his revenue, 75% of his revenue, if he loses that one client, right? And so we talk with him about diversifying and trying to get more clients so that he's not so concentrated on that one client. We say that your revenue is concentrated and it's a risk. So if they leave you, you might not be able to cover your expenses anymore. So you want to, reduce that risk. Ask yourself, is the revenue repeatable or is it one time? So if I sell refrigerators, when I sell that refrigerator, they're not likely to buy another refrigerator for 20 or 30 years, right? But if I sell subscriptions to a coaching service, they might come every week for years, right? So is it repeatable revenue or is it one-time revenue? That's one of the things you want to take a look at. Finally, did you actually get the cash? Did your customers pay you or do they owe you? So when you're a small business and you do business with a large business, they will have mean terms. They'll come to you and they'll say, well, we're always net 40, net 45, or net 65, net 60. I guess usually 30, 45, or 60. So that means I don't pay you for at least 45 days. So, if you're doing business with a big university, right, they might be, send in your invoice and then, it's net 60. So 2 months before you're even going to get that money, right? So did your clients pay you or do you have what we call accounts receivable? Are you waiting for the money? Okay. And we call that working capital. That's when you start a business, you have to put out the expenses first and then you don't get the money until a little bit later most of the time. And so when you put that money out, we call that working capital. So you probably heard the phrase working capital. And it refers to money that is out there in the system. And it basically belongs to you, but it's moving around. So if I buy something, now that money's out there, and I'm going to sell that thing to somebody else, I'm going to get it back. It's my money, but I'm not going to get it back for a while. And so it's circulating, but it's not in my pocket right now. And so we call that working capital. And if you're interested in the formula for working capital, you can just Google formula for working capital and I'll tell you how to do it. But just think of it as money that's out there in the system. One of the best examples for working capital is if you join a company and they say you have to travel, they'll usually make you put it on your credit card. And so you might have $10,000, $15,000 in travel expenses before the first time they reimburse you. And so that $10,000 or $15,000 that's out there that you're waiting to get back is working capital. So if you start a new job and it's a job where you have to travel, you may have a lot of working capital that you have to put in the system. When you close a business, that working capital comes back out. And you often get a lot of cash when you close a business. And that's always very surprising to people. So like, where's all the money coming from? This is great. It's working capital. It was yours. It was all out there in the system. It was a very confusing thing when I ran my tutoring business because it was growing very quickly. And the faster I grew, the less money I had in my bank account. And I could not figure it out. I was like, why? I'm doing really well. How come I don't have any money in my bank account? Because I had to pay out the expenses before I got the money back. And it was, the faster you grow, the more challenging that is. So that's a very interesting thing. Okay, so we've talked about our revenue, and before we get into the expenses, I just want to pause and see what kind of questions we have and get any questions answered. We checked off 2 items on our agenda at our monthly appointment with ourselves, and then we'll take a look at expenses in a minute. But what kind of questions do we have? So if you have a question online, go ahead and put that in the chat. Do you have any questions in here about revenue? We covered a lot of territory. What'd you think about it, Bernard?
I have a question.
Okay, question from online?
If you loan money to the business, how do you deal with it? Does the business pay interest to your person? So if you lend the money to the business, how do you account for it?
Yeah, that is a question for your accountant because situations can be different. But yes, you could make a contract with your business that it would, pay the loan back to you with an interest rate over time. And I actually have a client that has done that. It's a very large loan. And, the business is paying it back to her and her husband over a long period of time. So you treat the business like an entity, a person, and it has obligations like people do.
Well, it's kind of nice because you can make a little interest off of your business.
Only if the business is doing well.
Yeah.
Other questions about revenue? Okay, well, we'll talk about how to, make the revenue when we get into the marketing section. Okay, so it's customary to put revenue at the top of this income statement or profit and loss or P&L or all the other names. It's customary to put the expenses at the bottom underneath. So you can see in this example that the company paid for cleaning supplies, gas, insurance, phone, and bank fees. So those were their expenses in the month of December 2025. So what can we learn about these expenses? So one of the questions we might ask ourselves is, are these expenses variable or are they fixed? So a variable expense is one that will go up when you get more customers. One more customer, one more expense, one more customer, one more expense. So I often use the example of a lemonade stand. If you are selling lemonade, when you have one more customer, you hand them that cup of lemonade, and the expenses that you have are the cup, right? That's an expense. And then the lemons, the sugar, the water, the things that went into it. Those are your variable expenses. Every time you sell a cup, those expenses go out there. Or I use the example of a chair. And when you make one more chair, you need one more seat. When you make one more chair, you need the back of the chair, 4 more legs. So all of the things that go into making the chair are variable expenses. So what's the opposite? Fixed expenses. So a fixed cost is something that doesn't change no matter how much you sell. So your rent, for example, is usually a fixed cost. So if your rent is $4,000 a month, they don't care how much you sell, they're still going to charge you $4,000 a month, right? So that's a fixed cost. So let's take a little quiz. Which of these costs are variable and which ones are fixed? So gasoline for a trucking business. And if you're online, go ahead and put it in the chat. Gasoline for a trucking business, is that variable? Or is that fixed? Variable, right? If you drive some more, then you're going to have more of that. And it's going to get more expensive this week. Okay. Insurance for a retail business. Is insurance for a retail business variable or fixed?
I would say fixed on a yearly basis.
Yep, it's fixed. Doesn't matter how much you sell, you're going to pay the same amount of insurance. It might jump up at some point, depending on what you sell, but it's still considered a fixed cost. Phone, let's say that I have $100 a month for unlimited data. Is that
That's variable because it changes depending on how much data you use, right?
Well, I have 100 a month for unlimited data.
Oh, that's fixed then.
Then it would be fixed, right? But it could be variable, couldn't it? It could be, right? If I had a plan where the more business I did, if the phone call was part of the sale, then that could in fact be a variable cost. Zoom Pro, $13.33 a month. Fixed. Cups, sugar, and lemons for the lemonade stand. We already covered that. That's variable. Electricity for a car factory.
Variable. gonna change depending on how much electricity is used each.
Yeah, so that one's tricky. This is my little trick question at the end, because we generally consider it a fixed cost from an accounting perspective, but it does go up as you make more cars,
Yeah.
but it just doesn't go up linearly, right? So it's not one more car, one more electricity,
Oh,
right? And so because they're not exactly linked, we'll put it in the fixed cost. So we do tend to put costs like that in fixed cost, but that's my trick question so that we could cover that. Yeah, okay, interesting. So back to our restaurant cleaning business. So which of these expenses are variable and which are fixed? So insurance. I guess cleaning supplies are at the top of the list. Are cleaning supplies variable or fixed?
fixed. Cleaning supply, you mean the same things that you buy each, oh?
It's a cleaning business.
Oh,
Variable.
It's gonna be variable because the more customers you have,
that's true.
every customer, you're gonna have to get more of those cleaning supplies,
That's
right?
true.
So, but if it wasn't a cleaning business,
Yeah,
right? Okay, what about gas?
well, that should be variable, right?
That's variable. They have to drive to the client, more clients, more gas, right? In a very linear way. Insurance,
Fixed,
fixed, phone,
fixed.
fixed, and bank fees.
What's the last one?
Bank fees,
Variable, I think, depending on.
right? If you have like a 3% charge, if you charge on charge cards and you have a 3% charge every time somebody makes a purchase, then it's absolutely variable, right? That 3% is variable. But if your bank charges you $10 a month, just to have an account, then that part's not variable, right? Okay, so now we have some new accounting skills. We can tell variable from fixed costs. So which expenses will go up if you win more customers? That's the question. The variable costs will go up if you win more customers. So you need to be ready for that. Because sometimes you get successful and you're like, oh my God, I have to buy a bunch of stuff. Right? If I want to do more, I'm going to have to buy more. So we have a client that sells a kind of a protein powder. And manufacturing the protein powder is very expensive. It can be like, $100,000 to put out a batch of their protein powder and then they sell it. And so when they get close to the end of a batch, they have a big debate about, do we make more? Because they're going to have another big expense to put out the next batch, right? So that's the kind of questions you want to ask yourself when you have your appointment. So is there any way to reduce or negotiate any of your expenses? That's one of the questions you want to ask in your appointment with yourself. So look at those expenses. How much am I spending? Is there anything I could negotiate down or get rid of? Particularly subscriptions. Subscriptions are evil. They are insidious. All these apps that tell you how to get rid of your subscriptions because every month you get that cost, right? And, Mavis runs our, financials at Zenagos, and she's tough on costs. And I really appreciate it because every dime that you spend for somebody else comes out of your pocket. So be tough on those recurring expenses. Is there anything that I have that I don't need? Like maybe I like it, but do I need it? Right? So be tough on yourself at your monthly appointment. It's always easier to cut costs than it is to increase your revenue. So we have a client who has $6,000 a month in revenue, and you'd be like, wow, that's pretty awesome. But she's spending out 4,500 of it a month in rent and, paying other people to do work. Now she could do the work that they're doing herself, and she doesn't actually need the rent. She could do it out of her house. So what if she just got rid of all those costs? Wow, she'd be making a lot more money, right? So, don't kind of go with your assumptions. Look and be like, do I really need to spend that? Could I really? Because it's so much easier to cut a cost than it is to add revenue. And so be tough on those costs in your monthly appointment with yourself. And are all the expenses still creating value for the business? So maybe when you first signed up for it, it was creating a lot of value, but is it still creating value today? And that's why we need the monthly appointment, because it might have been great when you first did it, but once a month, check. Okay, and then what are you going to do if you get a surprise this month? So do you have any kind of emergency fund? Most small businesses don't have any emergency fund. the rule of thumb, if you ask accountants, would be that you should have 6 months of operating income, so that in a like a savings, right? But just a account that you don't touch. So what are my expenses multiplied by 6 that you want to have as your emergency fund? And we all learned during the pandemic how important that is, right? But most businesses don't have that 6 month buffer. So start small, right? Put away $10. Put away $10 next month. Just start building it up. I have a client who has a very, very small income, but he has a $60,000 buffer fund that he will not touch. And I so respect him for that. Right? Because that's his rainy day, and he's looking out. He's watching out for himself with that. And it's really, really important. So try to build up your emergency fund. Is there any way that you can start to save up? And again, you're going to learn a lot from looking at your expenses every month. All right, so we looked at the revenue, we looked at income, we looked at the expenses, and we thought about what the changes were in them, what we can learn about them, if there's a way that we can reduce those costs. Finally, at the bottom is the net income. So that's your revenue minus all of your expenses. That's how much money you made after you account for all of your costs. So again, this is a very important number, so it has a lot of names. It can be called net profit. It can be called net earnings. It can be called operating income. It can be called EBIT, which I just think sounds funny and I like to say it. EBIT, earnings before interest and taxes, or EBITDA, which is earnings before interest, taxes, depreciation, and amortization. When I went to business school, everybody's saying EBITDA this and EBITDA that. And I was like, what are they talking about? They're just talking about the earnings before you've done accounting adjustments. So if you look at a really big company's financials, like if you go to Yahoo Finance and you pick a company like Disney and you look at their financials, look for EBIT, EBIT, and that will be what you're used to as revenue minus expenses. So everything that happens below that is some kind of a funky accounting adjustment. But if you want to see, did the company really make money? Look for EBIT, revenue minus expenses. And it's also called the bottom line because it is the bottom line. It's all the same thing. So how much money do you have left over after all of your expenses? That's your profit. Okay, so when we look at the bottom line, one thing we want to know about net income is what percentage of revenue do you get to keep after all of your expenses? We call this net margin percent, and you get it by taking the net income and dividing it by your total income. So in the case of this restaurant, you take the net income, the bottom line, divided by top line revenue. Net income divided by the revenue. And you'll get a number like, 0.85, and just say that as a percent, 85%, or it might be like 0.05, say 5%. So the way you say it is, my margin is 85%. Okay, so teach them financial language so that when you talk with financial people, you can, play the game. So in this business, the restaurant cleaning business, the net income is $1,278, right? That's the bottom line, divided by the total income, $1,500. And if we do that, we get 0.852 or 85%. So 85% is the net income margin. My margin is 85%, which you can translate in your head as I keep 85%. Okay. The bigger is better with net income, but clients often ask me, is my net margin good? Right? Is this a good number? And it really depends on your industry. So some industries have very tight margins. Airlines are usually negative, and they're going to go really negative as the gas prices go up. They're not going to have very much fun with their margins. Grocery stores have very, very tight margins, usually 1 or 2%. It's a very, very tight margin business.
Restaurants too, right?
Restaurants are tough, but some food businesses tend to have high margins. Pizza, donuts, soft drinks, things that are bad for you have high margins.
Yeah.
10 to 15%, because, when we really need a pick-me-up, we go and we get ourselves some Dunkin', don't we? And as my contractor friends told me, you never cheat on your Dunkin'. So you only go to your Dunkin', you don't go to some other Dunkin'. Okay, there are rules. So 10 to 15% for some food businesses. Services tend to have higher margins. So consulting, you know, a kind of a coaching business would, you know, any kind of service business like that would tend to have a higher margin. So it might be 20%, it might even be more. If you are the person performing the service, it might be 95%, right? You might have very, very small costs. At Zenagos, we don't have any employees and we don't, you know, fly anywhere, we don't travel. And so our margins are very, very high. We really just have Zoom and our email account and anything else. What else do we?
Little workspace.
Little Google Workspace, some insurance, right? But pretty much our costs are down to this little tiny amount. That's what you want, is the lowest cost you can have. And so our margins are very high. Pretty much whatever we earn in revenue goes to the bottom line for us. But if you pay other people, so for example, if you have a service business where you pay other consultants, then your margins probably be closer to 20% or, you know, or less. Financial services and banking have very high margins. So those are nice businesses to be in, but they also have very high risk. So, you know, you get paid for having some high risk, but they do have high margins. This restaurant cleaning business is doing pretty well at 85%. They're doing a pretty nice job keeping their margins down, right? Not bad, not bad at all. Okay, so when things don't feel right, you want to trust yourself. Once you've looked at your numbers for the month, ask yourself, do they make sense, right? We're talking about being a finance detective or revenue detective, but you know, when your costs are involved, you'd be a finance detective. Listen to your instincts. When things don't feel right, trust yourself. So one of our clients sells barbecued meat. And one month she noticed that her revenue was down, and then next month it was down again, but her costs were the same and her inventory was the same. She's like, how is this happening? Why is this happening? She did some research and she found out that her employees were, when they were cutting up the pig to sell the barbecue, would just take a couple legs home.
Yeah,
And then they started to get a few more legs home, right? And take a little bit of the side home. So she was having some theft from her business. Pretty much anything in your organization that has value can be stolen.
right.
And so you need to think about how to put protections in place. We call them controls in finance, so that you can tell. So I went to Modern Pastry down in the North End last month. It was a celebration. Go hit Modern Pastry on the way home, get a cannoli. And they have cameras over all of the cash registers. It's a very, very big cash business. Like, what are those cameras for?
Yeah.
Making sure that they're protecting their assets. Right? They expect a little bit of, you know, people giving some cookies to their friends or whatever, but they need to keep it within a certain range, right? I worked in a business where the company would buy leads, and so would pay for marketing. And one of the employees, millions of dollars would go out every day out of this company for marketing. And one of the employees bought marketing for a product they didn't have. And then he sold that information. So he, you know, people replied and said, yes, I want this thing that you advertised. And he took those names and sold them to his friend who had that business.
Oh,
And so he was buying marketing for a business that we didn't have and then selling that information to someone else for half price. Right? And we don't sit around and think, well, marketing can be stolen. Anything that has value can be stolen. And so you want to look at your financials and say, what has value here? And how can I protect myself to protect that asset? Yes,
do they
questions?
still have those marketing places? I know 30 years ago it was big, but I thought that it kind of went out of,
Oh,
Illegal.
marketing will never go out of style.
no, I mean, you can actually get leads, you can buy leads from companies
Yes, you can. Yes, you can.
to get in touch with you to find out.
We can talk about that. Okay, so, you know, anything with value, so you want to be on the lookout for that. And also mysteries, right? So for example, we have a client who works with Stripe. So, you know, they get their income because the customers click on a link and then use their credit card and pay Stripe, and then that comes through Stripe to their bank account. And she suddenly stopped getting emails from Stripe. So every time a customer would buy something, she would get an email from Stripe. And then she suddenly stopped getting emails from Stripe. And you know, you might be really busy and you might just be like, I'll check that at the end of the month, or I'll check that next month. But she thought, you know, why am I not getting emails from Stripe? And so she went and barely headed off getting hacked, right? So somebody hacked into her email
Oh,
And they then changed her email so that anything coming in from Stripe would go to trash, so she wouldn't see it. And then they wrote to Stripe and said, please change the administrator to me. Right? And she wouldn't see them changing the administrator because it went straight to trash. Right? So when she got into her trash and she saw all these emails, she saw that somebody was contacting Stripe and getting the Stripe account changed over to them. So she barely headed that off. So be curious when something changes, be a detective. And go ask yourself, why is that changing? Particularly when it has to do with your revenue. Okay, so look for things that don't make sense. This is a really important way to protect your company. So this webinar today, might save your company's life. Okay, one last thought on P&Ls. So often a P&L is going to have its expenses divided into two sections. So if you have an accounting system, you may see this. So you'll see revenue on the top, and then you'll see one set of expenses in the middle called direct costs or cost of goods sold. Those are the variable costs. Remember how we learned to separate the variable from the fixed? So they'll put the variable costs right there in the middle, and then you'll have this subtotal. And the subtotal will be called something like gross margin. It might be called gross profit, depending on what kind of an organization you have. So why is there a subtotal in the middle of your financials? If you're doing your financials at the end of the month, this can be very confusing. You're like, why is there this subtotal in here? And you have to kind of separate out those expenses to get the total expenses, right? So if you're selling lemonade, that subtotal would be your lemons, your cups, your sugar, right? So those are the ones that go up every time you sell one more unit. And why did they stick that subtotal right in the middle of your thing? And then the fixed costs go right below it. So in this situation, we have a lemonade stand P&L, and you can see that the lemonade, I made $150. That's my revenue. I sold 100 cups of lemonade for $1.50 each. So I made $150 in revenue. And then I have $50 in cups, lemons, sugar, and water. So $50 in direct costs. So I subtract that, take the 150, subtract the 50, and I have 100 left over after my variable costs. That amount left over after your variable costs is called gross profit or gross margin. A little subtotal in the middle of your financials. And then you add the fixed costs below. So they had $20 in fixed costs. And then 100 minus that 20 is 80. So their total or net income is 80. So those two groups of costs, one's $50 and one's $20. So it's $70 total. It's at 150 in revenue. They took out the 70 and they have 80 left. But why did they do that? Why do they have that funny subtotal in the middle there? So if you see that P&L like that, just remember you need to add up the two sections. You need to add up the direct cost section for 50 and the fixed cost section for 20 to get your total costs. So if you see that in your financials, just remember you have to add up both sections to get your total costs, right? The reason they do that is that it helps you to see how to break even. So it's from a financial perspective, it's a really handy thing because it lets you see how many units you need to sell to break even. So remember the revenue up there, direct cost 50, fixed cost 20, total cost 70. And then if you subtract, you get that net income. So that's just a little summary so you can see it more clearly. And that's exactly what you want to do in your appointment with yourself. You want to review your revenue, check your expenses, and then, kind of see how that all works together. The reason that we do that is that we say, if I divide my fixed cost by my number of units, I can see really quickly how many units I have to sell to break even. So I can cover that in the Q&A if you're interested in that, but that's why that's in there. And it's confusing if you don't know that there are two kinds of costs, but now we know what those two kinds of costs are. And, we can talk about that further at the end if it interests you. Okay. So now you've had your meeting with yourself. You've covered your revenue. You've covered your costs. And chances are, like right now, it's 7 o'clock for us. So you hit your hour and you're done. Right? So for most of us, when we have this appointment, we're not going to get past the revenue and the cost part for a few months until you get a little faster at it. So, that's fine. Wrap it up. Good job. Make an appointment for next month. Question.
There is a question.
Yes.
For expenses that are incurred quarterly or annually, do you divide and report on the expense statement? Or do you include on a cash basis of when they are incurred?
So let's say that I had something that was $30 a quarter, and the question is, do I do 10, 10, 10 for the 3 months? Or do I just do the 30 when it comes in? So different accountants would do different things depending on the situation. But for most small businesses, we just put it in when we get it. So it would be a lump 30 when you had that expense. And when you get to the advanced part of your meeting and you start doing a forecast, then you would put that in every 3 months. You'd be like, there it is, there it is. So you would know it was coming, right? So you wouldn't get surprised by it. But we don't have to spread it out to smooth it out. We can just put it when we get it. So you'd have, your expenses would look like, not so much, big number. Not so much, big number. And you would get used to that in your, like, I made more. Ooh, not so much this month. Right? But as you come to expect it, then you would learn to save and to make sure that you had enough for that big month, right? Really good question. Okay. Okay, so when you get to the point where you can review your financials really quickly, so you go through your revenue, check previous months, check previous years, go through your costs, what kind of costs do I have, where do they come from, nobody's stealing from me, excellent. Feeling good. So most businesses would like to have more revenue. Revenue comes from marketing activities. This is actually one of the biggest gaps that we see in working with small business owners, is a lack of understanding that revenue comes from marketing activities. So I'll say to my clients, what do you do for marketing? They say nothing. And I say, really, you do nothing for marketing? And they say, I say, how do you get your clients? And they say, well, I go to a lot of networking meetings. And I thought, that's marketing. Yeah. Networking is marketing, right? So you do something. Maybe you go to shows to sell your art. Maybe you go to clients to talk with them about whether they need your help. You do something for marketing. Okay, so in the next part of our meeting, we're going to track our marketing results. That's the next item on our agenda. Record your marketing and your sales results. So we've got a completely awesome free marketing tracker for you to use. You can copy it into your Google account. And so if you're online right now, Mavis is going to copy that link and put it in there that you can, or I guess Stacy's going to do it, that you can click on it and it'll say copy. And if you click that blue button, it'll put that into your Google account. If you get the QR code at the end in the download that you'll get, the link is active and you can click on that link and it will click on it and let you have that. If you have any trouble getting it, link with me on LinkedIn. I'm the only Karen Baldishwheeler. Type Zenagos, you'll find us, and we'll make sure that you get it. Okay, so it's a nice tracker that you can have in Excel or you can have it as a Google sheet.
The link, what is the link?
That is the link. So when you get your slides, you'll see this link and you can just click on it and it will put it into your Google account. And if you have any trouble getting it, just link with me on LinkedIn and I'll show you how to get it. Okay, so it looks like this, right? But you don't need the fancy sheet. You can just do it on a piece of paper. But the fancy sheet will calculate a couple things for you, which is nice. And so the first thing you need to know is, what are your marketing activities? What are you going to do to get new customers? And so we have a list of the different kinds of activities that are common for small businesses. You might say, I like to go and give talks, and that's how I get my customers. Okay, so that's a kind of a marketing activity. We call each activity a marketing channel. That's just kind of a customary term, marketing channel. So what are your marketing channels? And so at Zenagos, we have this list of channels divided into 4 categories. There are many, many, many ways to market your business, but we group them into 4 main categories. So the first one is personal marketing. So these are ways in which you sell yourself, like networking, giving speeches, making partnerships, anything like that we put into personal marketing. There are people called appointment setters who will get you appointments with people that you want to talk to for a fee. So that's a type of personal marketing. Trade show booth. You stand in a trade show, or if you have art, you go to an art show, right? So those are all personal marketing. The next category is digital marketing. These are ads that you buy on a platform like Google Ads or Instagram ads, Facebook ads, LinkedIn Navigator, email ad campaigns. The next is content marketing. So this is where you make content as a way of getting people excited about what you do. So you don't actually directly buy an ad, but you post something interesting. So in your business, you might post something about the, kind of technology or science that you know, and they would go, wow, he knows a lot about this. We should talk to him about this thing we need at our university, right? So that would be content marketing. If you see Instagram people who do their art on Instagram, that's content marketing, right? And then traditional marketing. So flyers, door hangers, direct mail, these are the old school things that you're used to getting, right? So the thing that comes in your mailbox, or somebody hangs something on your door, or you're walking down the street and somebody gives you a, handout, or you go back to your car and you realize there's something under your windshield wiper, or there's a, business card in your door. Those are all old school. And then the really expensive ones, magazine ads, radio ads, television ads. I guess magazine ads are rapidly going out of style. I saw a child in an airport with a magazine on the floor, and she was pushing like this, trying to get the pictures to go larger on the magazine. And I realized that a magazine to today's children is a broken iPad.
Yeah.
So it's an iPad that doesn't work. Okay, that's, we all have to adjust as times change. Clients often ask us, what is the best marketing channel for a small business? And the answer is the one that you will do consistently. Right. So if you go to the doctors, doctor, what's the best form of exercise? They'll say the one that you will do consistently. And it's the same thing for marketing. What is the best marketing channel for business? It's the one that you will do consistently. So if you're super shy and you won't go to networking events, that's not the best marketing channel for you. Even if it might theoretically be the best marketing channel for your kind of business, if you're not going to do it, who cares? Right? So it's the one that you will do. And as I was saying in the beginning, this is one of the biggest gaps that our small business owners have, is they don't understand what they have to do to market their business. So, for example, Mavis does the marketing for Zenagos. And she came to me in September and she said, to get the number of new clients we would like this year, I need to have 150 individual meetings. So she's figured out how many meetings it takes to get a new client. And she said, I need 150 individual meetings to get the number of new clients we need this year. So I need to go to 30 networking events in the fall of 2025. And I'll be darned if she didn't go to 30 networking events. If you follow Mavis's LinkedIn, you'll see Mavis at the Chamber of Commerce, Mavis at the party. Yeah, she was doing her networking. Right. So you have to figure out how much you have to do, and you have to do it. And consistency really matters. People can say whatever they want about what the best way to market your business is, and they will, by the way. When you talk to your friends, they'll all be full of suggestions for you. The only way to find out whether a particular marketing channel works for your business is to try it. That's the only way to know. Everything else is just theory, right? And things that don't work for some businesses work for others. So when Zenagos first started, we tried buying Google Ads. It was a disaster because start a business is one of the most popular search terms across the internet. And so we couldn't get through the noise. There are lots of big players that are buying the term start a business. And so we couldn't get through there. But I have a friend who sells classes to teach kids writing skills. And she uses Google Ads all the time. She's a teeny tiny itsy bitsy business. But she can get her clients through Google Ads because she doesn't have a lot of competition. Other people don't want to spend their time teaching kids how to write. Right? So Google Ads works great for her. So you just never know. So when your great wise friends are telling you what's going to work and what's not going to work, just remember, you don't know until you test it. That's the only way to know. Some tests are too expensive to try. That's okay. I'm not going to try any television ads. Right? I already know that's going to be too expensive. But if it's within your price range to try it, the only way to really know is to try it. Okay, let's pause before we move on from marketing channels. Questions about marketing channels? No questions yet. So when we have our clients make a marketing plan, we have them choose 3 channels and we ask them to do them for 3 months. There's that question. What's the question?
Question is, are there tried and tested marketing channels by business type that you can share?
If you want to ask a question during Q&A about your particular business, we would be happy to tell you what the kind of highest probability channels are for that kind of business. But remember, the only way to know how it's going to work for your business is to test it. So, I would like to think that I have great wisdom, but in the end, you really do just have to test it. Right? So yes, I will absolutely be happy to answer a question like that in Q&A. We're going to get there shortly. Okay, so try 3 channels over 3 months. So choose 3 channels that you're going to do and do them consistently for 3 months. And why 3 months? Because you need to give it some time to work. So I'll give you an example. When I was thinking about starting Zenagos, Mavis and I got together and we were like, we would like to start Zenagos. We talked to Monica and Stacy and said, what do you guys think about starting Zenagos? Let's do some interviews. We'll talk to some people and see whether this is a good idea. Because there are a lot of free things that people can get help with their business. Maybe it's not a good idea. So we decided we want to interview people. So I went to my friends and I said, do you know anybody who has a small business who'd be willing to talk with me? And they all said, nope, don't know anybody. I said, well, just keep an eye out. And if you run into anybody, I'd really like to talk with them. I'm not going to sell them anything. I just want their advice. And it took about 3 weeks of me telling all of my friends, I'd like to talk to people who have small business. About 3 weeks later, somebody said to me, oh, I do have a friend who has a small business. Would you like to talk with them? So it takes a while, right? And I didn't really have enough people to interview for a good 3 months. And then after 3 months, I'd had too many people to interview. Right? All my friends were giving me people to interview, right? So you need to it needs some time to get working. You start telling people what you're doing and how you do it and so forth, and it takes a little while. So give it 3 months before you give up on it, whatever it is. Okay, so at Zenagos, our favorite marketing channel for small businesses is partnerships. What's a partnership? A partnership is you find another business that sells to your same customer, but they sell them something else. They don't sell what you sell. So partnerships can be very powerful for small businesses. So Zenagos offers coaching and consulting. So who's a good partner for Zenagos? Well, our client is a small business owner who'd like to grow their business. Who would be a good partner for Zenagos? What do you guys think? Your small business owners?
What's the question again?
Who would be a good partner for Zenagos? So somebody who sells to small business owners, but doesn't sell them coaching and consulting.
Lawyers.
Right, lawyer. Right, lawyer's great, right? Because they'll have a client and the client will say, I need help with my small business. And they will say, maybe you need a small business consultant. Now, lawyers have a little bit of a thing about making referrals, so maybe they're not the perfect partner for us, but you know who's perfect? Bookkeepers,
Oh, yeah.
right? Because when somebody's having a problem with their small business, they don't like to tell their friends, but their bookkeeper knows. Right?
Someone online suggested local bank.
Local bank. How many banks do you know, Mavis?
A dozen at least.
Mavis has lots of friends in banking. Very good suggestion. Very, very good suggestion. Okay, so you have to think about your business and you have to say, who sells to my same customer, but sells them something else? And so you might want to ask your customers, what else do you buy? What else do you frequently buy, right? Who's the buyer at your university? Is it a dean? Is it a department chair? Who buys your kind of consulting? And then get to know a couple of them and ask them, what else do you pay for as a university? Because those are your partners, right? And the deal with a partner, it could be, I refer to your people, you refer to my people, right? So maybe I sell blog writing and you sell marketing. And so when you get a marketing partner, if they need blog writing, you refer to me. When I get a blog writing person, if they need marketing, I refer to you. See, so it could be like that. Or it could be, if you'll refer your clients to me, I'll pay you. right? So if you're a gas station and I'm a restaurant, we're right next door. I could say to the gas station, for everybody who comes over with one of your receipts, I'll give you $5. So every time somebody buys, I'll be like, hey, you should stop over at that restaurant. Right? So there are all kinds of partnerships. It's all infinite creativity.
I
But
had one when I was, I had a health club in the eighties and nineties, and the next neighbor, right next door was a travel agency, and so we exchanged, information and names and customers and,
all the time,
yeah.
right? So you want to look for those partners. It's our favorite channel because it's inexpensive. And when you're networking, you can find one customer from that conversation with networking. But if you find a partner, they might give you one customer every month for the rest of your career.
Yeah.
Right? So they stack up. Partnerships really stack up. They're very powerful for small business. Okay, so once you've chosen your marketing channels, then each month at your appointment with yourself, you need to write down, number one, how much money did you spend in that channel last month? And it's okay if it's zero. How many leads did you get from the channel? Now, a lead is a potential customer for whom you have a name and contact information. So if somebody goes to your website, is that a lead?
Say that again, if somebody would.
Somebody goes to your website, is that a lead?
Sure.
Do you know their name and contact information? Nope,
No.
it's not a lead. If they go to your website and they enter their email address to get your cool document, are they a lead? Now they're a lead, which is why people are always asking you for your email address because they want to make you a lead, right?
Yeah.
If you sit at a table and people walk by your table, are they leads?
No,
If you sit at a table and somebody joins your mailing list, is that a lead?
yeah.
Yes. That's a lead. So any way that you can contact them, if somebody follows you on Instagram, is that a lead? Yeah, you can contact them back.
Yeah.
You can. If somebody connects with you on LinkedIn, is that a lead?
Yeah.
Yes, that's a lead. Okay, so you want leads. How many leads did you get? And then how many customers did you get? So that's what you want to record on your sheet here. How much did I spend? How many leads did I get? How many customers did I get? Okay, so let's do a little example one. So you want to learn from the experience that you have. And this is the same as your financials. If you look at this, you're going to learn every month just by looking at it. You're going to learn something. So let's take a look at this owner. This owner does networking. So she pays $50 a month to be in the local Chamber of Commerce. And she's done that for 3 months. And so that's a total of $150. And so she spent $150 on networking this year to date, so this quarter. Now she got 30 new leads, so she got 30 business cards in her networking. And now in her second channel, she does public speaking once a month. That costs her $10 in parking. And she's done that for 3 months, so that's $30 that she spent on that. And then she spends $1,200 a month on Facebook ads. And she's done that for 3 months. So that's a total of $3,600. So those are her 3 marketing channels. And that's what she spent. So she just records, how much did I spend? Okay, now when you've made your monthly, and then I guess I should go through what she got from that, right? So she got 600 leads from the speaking because she put cards on people's chairs at the speaking event and gave them a free offer, and 600 of them took the offer. So she got their names. Or maybe the person gave her the registries for everybody who registered for the conference. And so she got their names, right? So she got a lot of leads from the speaking event. And then the Facebook, when people, go through and click on your landing page, you get their information and you got the leads. So she got 60 leads from Facebook. She got 600 from speaking and 30 from networking. But you can see that some channels are better than others. So 1 in 10 of the people with networking turned into customers. That's a very high conversion rate, 1 in 10, right? She needs to have 10 networking conversations to get 1 customer. But then speaking, of the 600 people, only 6 became customers. So for speaking, she had to have 100 conversations to get 1 customer. So it's not as strong a channel. And then Facebook, 60 conversations, 2 customers. So 30 conversations for 1 customer. So which is the most efficient channel where you do the least work to get the most wins? Networking, right? Which is the most cost-effective channel? We look at the customer acquisition cost, which is how much did you spend to get one customer? So you take how much you spent and divide it by the customers. So the customer acquisition cost for networking is $50, but for speaking, it's only $5. That's a more cost effective. But you can only get so many speaking engagements, right? That's more cost effective. Which one requires the most cash? Which one do you have to have the most cash to do?
Please.
Facebook, that's a lot of cash. Shelling out $3,600 a month. Whew. Talk about your working capital, right? Okay. So you've made your monthly appointment a strong habit now. You've tracked your revenue every month. You've tracked your expenses every month. You've thought about, being a detective and what do you need to look at? Does it make sense? Then you finally have gotten to the pièce de la résistance, the last item on our agenda, except for the 1%, which is making a forecast. So I've got a really great YouTube that shows you how to do a financial forecast, and that link is in the takeaway. So when you get that takeaway, just look at this link here, this little click here. And Mavis is going to put that link, or sorry, Stacey's going to put that link into the chat right now. So if you're online, you can have a link there. When you make a forecast, you're going to guess what your financials are going to look like for the next 12 months. And so in the beginning, you're not going to be good at guessing, or we talked about that. But you're going to get better and better at guessing. And the hard part is guessing your revenue. So we look at that marketing plan. The reason we're looking at that marketing plan every month is so that we can learn to guess. We can say, well, if I go to a speaking event, there are going to be 100 people there, and they're going to give me a list of all the people who are speaking. And so maybe I can get 100 leads. And then last time I got was 1 in 100. So maybe I'll get one customer out of that. Right. So Zenagos does talks like this one. And we kind of know how many people and how many talks we have to do before one turns into a customer. So we know our marketing metrics for this channel, and then we know how hard we have to work to get the number of clients that we want to get. So that's why we track our marketing. So we'll get better and better at guessing. Right. And so for the forecast, you lay out for the next 12 months how much revenue you think you're going to get, which is what marketing activities am I going to do consistently? And then how many clients do I think I'm going to get from that? And you make your best guess based on what you've learned about your marketing channels. And so this video has a little more information about that, but most of you aren't going to be at that forecasting phase for a good 6 to 12 months. It's just going to take you a while to get into your habit, right? And so, when you get there, that video is there for you. And then remember, stop your appointment at 1 hour. So don't go farther than an hour. You don't want it to be onerous. It's more important that you do something each month than that you get through the whole agenda. But just before the end of your hour, you're going to end your appointment with yourself by making a 1% promise to yourself. Pick something that you could change that would improve your business by just 1%. Doesn't have to be a huge thing. What could you do to improve your business by just 1%? So for example, could you send a follow-up note per week to a prospective customer saying, this is an article I think you would be interested in. Like just pick one customer a week and send them a note saying, what do you think of this article? Just, a hot lead or a customer that you want to stay in touch with, and just send them one article that would be like, I'm thinking about you. That's a 1% thing. Tell one new person about your business every week, even if it feels really awkward. Right? Just tell one person, this is what I'm doing. Right? Sit down at your desk and start work 10 minutes early each day. Right? Just ask yourself, what's one thing that I could do this month that would improve my business by 1%? And try to come up with that at the end of your meeting with yourself. And that's it. That's our conversation today. Now, I know you're all entrepreneurs and you don't like to ask for help because we entrepreneurs think we're supposed to be good at everything. But most people need some kind of help when they're growing their business, and there's all kinds of help available, and a lot of it is free. So Cambridge Development Department, Cambridge Community Development Department here, right here, CDD, can provide many resources. So Jared Staley here, Economic Development Specialist, is our sponsor here tonight. And he provides all kinds of services, and so get to know Jared. SCORE provides mentors for free, and you can get as many as you want, and you can visit them as many times as you want. If you want to brainstorm with a Zenagos expert, you can go to our website, zenagos.com, and get a free appointment with Mavis. And she'd be happy to talk to you for a few minutes and, brainstorm about your business. So get help from the people who are providing, who really want to help you. And in that vein, if you qualify, the CDD is making some Zenagos coaching available. So I'm going to hand this over to Jared to help us wrap up tonight.
Thank you.
And then we'll do Q&A after that.
So just real quick, and I'll send this out in email to everybody as well, just to keep it on front of mind. But for folks who have joined this conversation tonight, may be eligible for one-on-one business financial coaching with the Zenagos team. There are 3 different ways to be eligible. One is that your business is located within what we call a neighborhood revitalization strategy area, NRS for short. So those are specific areas within Cambridge that, based on income data, et cetera, the federal government recognizes as eligible for this kind of support. The other is that you as the business owner lives in one of these 2 areas in Cambridge. The third is for Cambridge business owners who are income eligible and micro businesses. That means you have, including yourself, fewer than 5 employees, full-time employees, sorry. And then income eligible depending on your household size, et cetera. So if you don't meet the first 2 requirements, we can review your federal income taxes to determine whether or not you might be eligible based on that. There is a form to fill out, and that comes directly to me. I'll review it, get back to you if I have questions or if I need confirmation on your income. And then once I approve your eligibility, I send an introductory email to you and the Zenagos team. And then from there, you have one-on-one conversations for up to 4 hours as Zenagos. As a heads up, after the first hour, I do ask that Zenagos sends me a report of what you've talked about and what you plan to talk about in the next coaching sessions. But beyond that, I am not involved in those conversations. I don't get to know anything about your business. That's between you and Zenagos. Any questions about small business coaching online as well?
Yeah, there's a question online, which is where can we find the NRS regions in Cambridge and their income limits?
That's a great question. You can find them on the Economic Opportunity and Development Division's website. So if you go to the CCD's website, you can find our division, and then there should be a small business coaching page that you can review that information on. I can also send that link in an email once I follow up with this, so you can review that on your own. Yeah.
I was talking to Tyrone earlier today, and he was talking about this, and no, I'm gonna forget the bad question. I'm sorry, I'll get back to you.
That's
Okay, when it comes up, just let us know.
I think the only other item that I need that's going to ask you in the eligibility form is for a business, Cambridge business certificate. If you're incorporated with the Commonwealth, I can also use that, but I just need to make sure that you are, for auditing purposes, you are a Cambridge business.
And who is it that you said you're not the person that they sit down with the coaching? Who is it that you sit down
These
with?
folks right here,
The 3 of us.
those Zenagos team.
Okay.
I just coordinate, hand it off, you have the conversation.
And we do it online, so you would, do it from home or wherever.
There was one last question, which is what does NRS stand for?
Neighborhood Revitalization Strategy and then area.
NRS area, okay. There's always an acronym, isn't there? There's an acronym for everything. So that's it for the formal presentation. We have half an hour to do questions. So if you were one of the people who wanted to ask a question about your specific business, now is your time. And just put it in the chat. And if you have feedback for us, put that in the chat too, or let us know, as we wrap up here. And don't forget to link with us on LinkedIn. I hope that there was something in here that, was interesting for your business. And then as promised, here's the QR code. So you just use your phone and you look at that and you'll get the link. And then you just put in your email and we'll send you the summary slides with all the links in them. And they're putting that also in the link to that in the chat. And if you have any questions, you can just ask me afterwards. We'll get it squared around. Okay, so I'll give
We
you.
had two questions.
Okay,
There's one which is marketing spend often means time as a solo entrepreneur. Is it worth calculating time spent for these marketing channels?
I get asked this question a lot, and it's a really good question. So the answer is we don't count the dollars in our tracking, so we don't translate your time into dollars unless you were going to pay somebody else to do it. So if you are paying somebody to go do marketing and then you replace them with yourself, then you could kind of keep the dollars in there because you might go rehire that person at some point. But usually we don't count ourselves as dollars in the marketing. But you should track your hours, because if one channel takes 10 hours of personal time a week and another channel takes 1 hour of personal time a week, then you want to know that, right? So it's wise to track your time, but for financial purposes, we don't usually turn that into dollars because it creates a kind of a false impression about how the money in your business works, because it would be you. Now, again, that's if you were going to pay somebody to do it, then we would count it, because otherwise you pay someone else.
So there was the question earlier that was about whether there are tried and true marketing channels by business types that you can share.
Okay, so give me a business type and I will tell you what we think the tried and true channels might be for that business type.
Her business is Shulin Management Company, which is a life sciences / technology consulting and trading.
Okay, technology consulting and trading business. Okay, so the primary service is helping businesses with their technology, is that correct?
I believe so. Don't know if
Yeah, I can speak. Yeah, so the primary work is consulting that needs marketing.
Okay, so the question is, what are good marketing channels for a consulting business that consults to technology companies, correct?
Life sciences and technology, because it's obvious that flyers and TV ads, those are not the ones that are going to work. So
Right, well,
That's-
Mavis is a lifetime technology consultant, so what would you like to add to our list of great marketing channels for technology consulting firms?
So in this case, given it's B2B selling, I would make a list of target customers that you think would be good for the business. And then I would go to LinkedIn and I would try to find the people who work at that company who have the right title. And then I would try to network my way to those people or send them direct messages or however you'd like to do it. But for consulting, especially if you're still young, like you're just like a 1 or 2 person company, you don't really need that many clients. And so actually having a target list really helps you focus. And can be a really more efficient way of reaching people instead of, let's say, sending huge numbers of emails and kind of waiting to see if something hits.
Right, so if we go back to our list, I'm gonna have to go hunt in the slides here to get back to my marketing slide. But if we look at our marketing channels, there is a marketing channel called Appointment Setter that is sometimes an effective channel for B2B. But the challenge with it is that it's expensive. And so if you don't have, let me just put those channels up so that you guys can look at them. So Appointment Setter is a great channel, but only for a business that has a high price point. So if your engagements are, $10,000 or more, then Appointment Setter can be a viable channel. We had a neighbor across our back fence who sold technology, energy consulting services should go into a company, analyze their use of energy, and then make an analysis of how they could save a lot of money and then implement it for them. So her average deal was, $400,000, and she would pay an appointment setter an average of $4,000 per new customer acquired. Now, when your average deal is $400,000, spending $4,000 to acquire that client isn't that much. But if your average deal is $5,000, you don't want to give up $4,000 of it to get the client. And so, if your average deal is pretty small, then you have to do the marketing yourself because other channels, are just going to be too expensive. And so Mavis is talking about targeted networking, prospecting for B2B. So what is the book, Mavis, that you would most recommend for somebody who wants to get good at targeted prospecting?
Oh, boy.
There was a book called that we were talking about the other day.
Yeah, I think it's called Never Go to Dinner Alone.
That's it.
And I cannot remember the name of the author off the top of my head, but his book is all about making target lists and then systematically going down the list. And he actually tells you how to do it so that you're meeting the people you want to meet, however you need to do it. And he's very creative in kind of how you get through that target list. But his list, as an example, included big companies like Coca-Cola and IBM. And he wanted to meet, C-level executives. So it was a very ambitious, approach and targeted list. But he did it. Took him 10 years, but he got through his whole list.
Yeah. And, you can go on something like Fiverr or Upwork and ask somebody to help you make a list. If you're having trouble making a list, you can ask ChatGPT to help you make a list. And so if you're having trouble thinking of the right kinds of companies, try those two things. See if you can get some help list making. Okay, hopefully that was a
Thank you.
helpful answer. Next
Oh,
question.
this is helpful. Thank you.
Great.
We have a question from Lucy. She's asking, can you please review the break-even aspect of separating fixed and variable expenses again?
I'm so excited that you asked me that question because I put this slide in my deck just for you. And here it is. Okay, so this is example of the lemonade stand. So the question is, how do you use that gross margin to calculate your break even? So here's my lemonade stand. I made $150 by selling 100 cups of lemonade, and each one was $1.50. And I spent $50 on cups, lemon, sugar, and water. And my gross margin is 150 minus that 50, gross margin $100. So why is that gross margin useful to me to find out my break even? The answer is the direct costs, the cost of goods sold, are separated. And so if I take my revenue minus my direct costs, I get the gross margin, right? We did that, we got $100. And then gross margin divided by the number of units is the margin per unit. So if my gross margin is $100, I conveniently sold 100 cups, so I can divide that easily. So if my gross margin is $100 and I sold 100 cups, what is my gross margin per cup? $1. So I clear $1 after my direct costs on every cup. So I sell a cup for $1.50. 50 cents of that cup is cup, lemons, sugar, water. So I clear $1 every time I sell a cup. So now I know that I clear $1. So my fixed costs, how much were they? My fixed costs were $20. How many cups do I need to sell to break even?
Real good with math.
I clear $1 for every cup. I get $1 left after every cup, after my direct cost. So I need to sell 20 to cover $20.
Oh, yeah.
I need to sell 20. See, I made it easy math. So that's why this is useful. So you take the gross margin divided by the number of units, and that tells you how much you make per unit. And then all you have to do is say, how much do I have to do to cover my fixed costs? So if my fixed costs were $30, how many cups of lemonade do I have to sell? 30. My fixed costs are $100. How many cups of lemonade do I have to sell? 100, right? So that's why they do that silly thing in the middle of our financials. Okay, I'm gonna leave that up there for you so that you can copy it down if you want to, because that's not in my takeaway slides. So if you want that one, you're gonna have to copy it yourself. But thank you for asking that question, because I just think it's so fascinating. Yes.
I'm wondering on the, since you're the company that, for the coaching, if you're eligible for the coaching, what type of business coaching, what can be involved? I mean, is it just what we're talking about today, or is it more involved? I mean, what can be involved in?
You can ask us any question you'd like to ask us, and we can cover anything. So with most of our businesses, we talk a lot about marketing because most businesses want more revenue. And so usually it's how can I market more effectively? What are the channels I can use? What should I try? And so those are often the things that we talk about. But every business is different, and businesses have lots of different challenges. Maybe what are some kind of common challenges that we
So we have a lot of people who are uncomfortable with sales. And so we talk about networking, how to do networking. We have a prescribed way of helping people get comfortable with networking. I do a lot of sales role plays so that people can practice their sales pitch or practice their message. And it will never be harder than just saying it the first time to someone like me.
Well, I don't have at all have trouble with sales. I've been in sales since I was 15, selling pots and pans door to door. But my problem is that I've never done digital.
Sure.
I had the ledger book when I had my health club, which was people traveling. I did the ledger book. And so I am still, I mean, I came today because I figured this would give me some more insight, but I still have a lot to learn. This isn't just the words, it's the actual doing. And I'm wondering if that's something that I would be eligible to.
That's Stacy's area of specialty is digital. And we can absolutely help with anything from what do I type into my AI to
Yeah.
Website?
how do I turn on my AI to what's an AI? We can do any of that.
Well, I'm not ready right now to do it, but I understand that this is ongoing, Jared. Is
Yes.
that true? That's what I was told. How
We
does it
do
work?
coaching on an annual basis. Our current contract with Zenagos is through June 30 of this
Yeah.
year. So we may be extending that, given when we're at in the year with this workshop.
Best to apply, because I applied ahead with the Tyrone today for a different type of grant. But when is the best time? Ahead of time, but he said it was good because for me to put in my thing for the June. A grant that I'm looking for, because I'd be sort of the first in the line.
Yeah.
Is that the same idea? It would be better to kind of come and talk to you, make an appointment with you and sit down and see if,
So I will send out probably an email tomorrow with everything, all the links, all associated kind of documents, etc. from this workshop. There will be a link in there that you can use to submit your eligibility form. I would do it as soon as you get it. Priorities for folks who have joined the workshop.
yeah.
And then we open it up to anybody else who may be interested. It is a first come, first serve. We have space for, I believe, 10 businesses getting 4 hours of coaching each.
Okay, so keep an eye out for that email.
But I mean, you don't have, the money is running out for this term, so this would be the June to July thing.
No, I would recommend doing it now.
Really? Oh,
Yeah.
okay, all right.
Yep, we can always schedule it, toward the end.
Yep.
It's not a big deal. Okay, other questions? Did we get anything else in the chat or any other questions here? You have
In
questions?
those formula, I think the operation costs are excluded, right? Operation cost, not the cost.
Yeah, I didn't put the little subtotal down there, which is
Yes.
the gross margin. It was on the previous slide, so yeah, so the $100 isn't there.
Yeah, so when we finally calculate the net income, we should add the operation cost.
Yes, and so to break even, we would say, how much is the operating cost? In this case, it was $20. And so if we went back to that previous, that's a great question. If we went back to that previous slide, right, this number here is the fixed cost, $20.
Yes, okay.
And so once we know the margin divided by the number of units, so 100 divided by 100 units, so $1 per unit, And then how much is left? $20. So unit 21 is profitable. Make sense?
Yeah.
Good. Okay, I'll leave that up there for you guys. Okay, other questions? Anything else before we wrap up? Hopefully that was worth your time tonight. Really excited to be here and to meet with you, and look out for that email tomorrow from Jared, and we'll follow up, make sure that you get our slides and that you can follow up. All right, thank you very much.
Thank you all.
Thank you.